Hey, what's up, guys? Welcome back to another live stream. Giovanni Tapi. Am I live? I think I'm still offline. Let me see. What's up, guys? If you guys can see me, please drop a comment and let me know. I cannot see myself quite yet. Come on. There you go. I am live, despite the fact that I cannot see myself quite yet. There you go. Welcome back to another live stream, guys. How was your trading session today? Tiana Phillips, 123 go. Diamond SF77. Are you in San Francisco, bro? Diamond. I don't know. I'm thinking that those two letters stand for San Francisco. Nicholas Watkins. Welcome back, guys. I have been streaming for 7 hours in a row. For the guys of my Patreon, I'm exhausted. I am making over here an extra effort in order to go live for you. No, I'm not in San Francisco. I thought so. There you go. Macmillan, 357. Please let me know what stocks you guys want me to go over. In the meantime, I can start with the SPY. Today we had another unbelievable melt-up. So please let me know if you want me. Yeah, it was not kind of a wild day, but it was Jesus. It was a super melt-up, and the major indices are. When it comes to the Nasdaq 100 and the S&P 500 or the SPY and the QQQ are very extended. That doesn't imply that they can't keep going higher, but they might be about to take some sort of a rest. Neo, absolutely. Man, I bet you're beat from all that streaming. Yes. Hey, Curtis, how are you? Yeah, bro, I live stream during the whole trading session every single day. I'm very tired. And on top of that, I live stream for you guys in English. So that requires some sort of an extra effort because, as you guys can tell, because of my accent, this is my second language, not my first language. Okay, let's review what happened today in the markets. Let's go over Yahoo Finance. Very broad rally across the board. Russell 2000 went up 0.81%. Nasdaq went up 1.15%. The Dow went up 1.26%. And the S&P 500 went up 1.22%. Keep in mind, guys, that today the SPY or the S&P 500 ended up going up for the 6th trading session in a row. So 6. Not 1, 2, 3, 4, 5, no. 6 trading sessions going higher in a row. The last time that situation occurred was back in 2021. So that was a whole different story, guys. We had the Fed printing money left and right, $130 billion a month. We had 0 interest rates. So and that's kind of another discussion, a macro discussion. But on the last occasion that we saw this a rally like the one that we have seen during the last 6 trading sessions, the situation that we had in general terms in the economy was absolutely different relative to the situation that we have as of now. So that's just some sort of an awareness. Let's just put it that way. If we take a look at these sectors of the markets, take a look. The 11 sectors went up, led by communication services, followed by healthcare, which went up 1.55%, and industrials went up 1.51%. We are seeing some sort of a healthy rotation in the markets. You guys know that only a handful of stocks have been doing the heavy lifting year to date. You guys know what stocks I am talking about, the NVIDIAs of the world, and the Apples of the world, and the Microsoft of the world, and the AMDs of the world. So the fact that today every single sector closed in the green is very positive in and of itself. However, The tech sector also went up today 1.29%. As I just told you, communication services led the way. This has also been, this sector, communication services, has also been a winner year to date. And another winner, consumer discretionary. When we talk about consumer discretionary, we talk about Tesla and Amazon, basically. This sector also went up today 0.66%. So for a real rotation to occur, we need to see money rotating or coming out from the winners year to date into the losers year to date. That would really confirm that we are seeing a healthy rotation in the markets. And why do I say that, guys? Because the tech sector represents, market cap wise, I have already told you this, something like 32% of the total market capitalization of the S&P 500. So we are still seeing the tech sector doing some sort of an important lift when it comes to the markets in general terms. So ideally, if we want to talk about a brand new bull market and stuff like that, we want to see money coming out from the winners year to date into the losers year to date. So that wasn't the case today. If we take a look at the decliners and advancers of today's trading session, take a look at the breadth. Today we had 4,152 stocks going up and 1,998 stocks going lower. Keep in mind that usually when we see these kind of very exaggerated ratios to either the upside or the downside, the next day the opposite happens. However, keep also in mind that tomorrow we have quadruple witching. So tomorrow we are going to have quadruple witching. Is a day that occurs, guys, pretty much 4 times in a year. And tomorrow we are going to have $3.5 trillion worth of options expiring. Yes, $3.5 trillion worth of options expiring. So that's a day in which usually weird stuff happens. And keep also in mind that the markets are going to be closed on Monday. You guys know that we have a brand new holiday. I'm not going to talk about politics over here, but I guess that all of you knew that the markets are going to be closed on Monday, right? We have this brand new holiday, Juneteenth. So usually, for the most part, before a long weekend, or let's say that on the Friday before a long weekend, the markets usually go higher. But we are, let's say, we are going to be getting into tomorrow's trading session with both the Triple Q and the SPY kind of overextended. And on top of that, we have quadruple witching. So anything could be happening tomorrow. There you go. How is Apple positioned? Yeah, let's go over Apple and Palantir. SoFi, absolutely. Just let me know what stocks you guys want me to go over, okay? Okay, SPY, guys, you know that I have been calling out bulls and strikes in my channel throughout the training session. I think that I have done a very decent job, right? Are you guys keeping a close watch on my callouts when it comes to the levels of support and resistance of the SPY? We have been taking good trades over there. So if you guys aren't paying attention to the stuff that I am posting, you'd better do it, because we have been taking good trades recently with the SPY. Carnival, absolutely. So guys, take a look at the SPY. I am going to pull up here a 1-year chart. Take a look at the relative strength index of the SPY. 77 points on a 1-year chart. So this index, you guys know that the SPY tracks the S&P 500, is overextended. I don't like the word overbought. It is very difficult, guys, to determine when a stock is either overbought or oversold. I don't like that term. I don't use the relative strength index that much because I have seen stocks going higher and higher and higher and higher, despite the fact of having a very high reading on their relative strength index. But as of now, the SPY is trading is trading 9% above its 100-day moving average, which happens to be rising, which is a very good sign from a technical standpoint. And also the SPY is trading 12% above its 200-day moving average. So there's nothing wrong with the tape. the tape is up, or the train is up. There's nothing wrong with it, but we have a lot of gains already accumulated over here, and because of the extension that we are seeing on the SPY relative to its 100 DMA and 200 DMA, the most likely outcome in the upcoming trading sessions would be some sort of retracement if the SPY wants to keep going higher. What levels I am going to be keeping a close watch on from a support standpoint? If tomorrow we happen to see some sort of retracement or some sort of pullback in the case of the SPY, $439 is going to be the first area that I think is very likely to provide a good support over here. And if 439 happens to be broken to the downside, I am going to be keeping a close watch on the 5-day moving average, which by the way happens to be rising, which is a very good sign for the bulls, at around 436.28. In the case of $439 or $439.40, take a look, guys, at the anchored volume weighted average price that comes from the Federal Open Market Committee that took place yesterday at 2 p.m. Eastern Standard Time, 439. So we have the convergence of a previous resistance with the anchored volume weighted average price that comes, or that I displayed, from the moment in which the interest rate decision of the Federal Reserve came out yesterday at around 2 p.m. 439. So this is going to be a very important spot for the bulls. I might be a buyer of the dip over there in regular market conditions, and if 439 doesn't happen to provide a good support, I might be trying to buy the dip, as I just told you, near the 5-day moving average at around $436. Alrighty, I have a bunch of requests over here. Let's go over some stocks. Let me see. Carnival Cruise, CCL, what is going on over here? Both have been going crazy, right? Carnival Cruise Line and also Norwegian Cruise Line. So CCL went up today 3.33%. It closed the trading session at $16.12. It is a bit overextended. Let's just put it that way. Nothing wrong with this chart on the 4-hour chart. This is a major uptrend. We have a semi-ascending 100-day moving average, and the 200-day moving average seems to be starting to rise, which is also very positive. However, take a look, CCL, and as I just told you, in the case of the SPY, is trading how much? 54% above its 100-day moving average. Wow, guys. Figure, if I told you that the SPY is a bit overextended, or is overextended, let's just put it that way, because it is trading something like, I don't know, 11% above its 100-day moving average. What about Carnival Cruise? So CCL is 40% above its 200-day moving average. I wouldn't chase it here. RSI is hitting at 77 points on the 4-hour chart. I would wait for a pullback, probably down to the 5-day moving average. This is a moving average that I use a lot, guys. So the 5-day moving average is sitting at around $14.90. This area could be providing support, and CCL could be bouncing back up and maybe filling the gap at which CCL failed today, $16.20. So CCL failed at $16.26, not yesterday, on Monday. And today the bulls failed once again right at this area, $16.30 or $16.20. If we were able to take this trade the way that I am describing it over here, guys, from $14.90, $15-ish, up to $16.40, this would be, get this, guys, a 9% profit trade. However, maybe one of you guys is holding calls over here, and you might be wondering how higher could be CCL going if it keeps going higher. Let me see. So the next gap over here, guys, would be up to $17.50. Let me draw a line over here. $17.50 happens to be a previous support back from December of 2021, and this is also a previous support back from April of last year. So this would be the next gap. If CCL keeps going higher, who knows? So from $16.46, let me see. Let's talk about Yeah, let's talk about today's closing price from $16.12 up to $17.47. This would be a 9% profit trade. This wouldn't be the trade that I would be taking. As I just told you, the stock is a bit extended. As we can see a bunch of stocks as of now in the markets, I would rather wait, or I would rather waiting for a pullback down to $14.90. Let me take a look, by the way, at the market structure of CCL. So what is demand and supply looking like over here? Let me see, CCL, Carnival Cruise. So what do we have here? Let me see. We have a rise in demand. Remember that on top of this chart, you guys can see the demand, and on the bottom of this chart, you guys can see the supply. So demand buyers, supply sellers. So we can see that the demand is way above the supply. However, the supply is starting to rise once again, and it is about to burst above average. So this makes me believe that sellers are starting to show up over here. So maybe $16.30 could be a possible spot for a quick short. And that makes me believe that I am not going to try to take a breakout trade over here with CCL bursting above $16.40, and that, as I just told you guys, I would rather wait for a retracement down to $14.93, because we might see profit taking. We might be potentially seeing profit taking over here sooner rather than later. Apple. RB, yeah, sure, absolutely. Let me take a look at Apple. Alrighty, it hit a fresh new 52-week high, not 52-week high, come on. It hit a brand new all-time high, baby, today. Apple closed the trading session at $186.01, and it went up today 1.12%. So there's nothing to complain. Over here, from a technical standpoint, this is a major uptrend, 100-day moving average rising. The 200-day moving average is also starting to rise. Unlike most of the other tech stocks, we can see that the RSI on the 4-hour chart is not that elevated. We can see the RSI of Apple sitting at 71 points. So that implies that Apple can keep going higher. Let me see what would be the next gap over here. Let me take a wow. I mean, there's no other gap over here, guys. Obviously, this is a fresh new all-time high. There's no other gap. So Apple is, as of now, in no man's land. So how high can it go, guys? I don't know, 190 maybe, which is a fat number. I wouldn't be trading Apple at these levels. And as I just told you guys, I would be waiting for some sort of pullback, or yeah, let's say that Apple pulls back down to 185. If the bulls can hold 185 as support, which happens to be a previous resistance back from early June, they could be gathering momentum slightly above 185 in order to potentially fill that unknown gap, because Apple is in no man's land up to 190, which happens to be a fat number. I wouldn't be an advocate of that trade. I would rather wait for a further pullback, guys, below 185. Let me see. What about a pullback down to 182? I am going to draw a line over here. Yeah, 182 is a previous resistance back from June 9th, and this is also a previous resistance back from early June, or back from June 2nd. So this would be a trade in which I would be interested. 182 happens to act as support if we happen to get calls or shares or whatever it is, and Apple happens to bounce back up from 182 up to 185. This would represent a 2% profit trade. So in no man's land, guys, a brand new all-time high. So I would wait for a pullback down to 182 approximately. In the case of Apple, let me take a look, by the way, at the market structure of the most important stock of the stock market in the world, by the way, good old Apple. Let's see and take a look, guys. Remember, on the top of this chart, you guys can see the demand, so buyers, and on the bottom, you guys can see the supply, sellers. So we have a fall in demand and the supply is starting to rise, yeah, a bull would argue that the demand is way above the supply, but the supply is starting to rise. It is about to burst above average, and buyers are starting to walk away from the stock, despite the fact that it hit today a brand new all-time high. So we might be about to see some sort of profit taking over here, and therefore we might be about to see lower prices, maybe 185, or why not, maybe 182 for Apple. NVIDIA, that's another stock that is sitting at a fresh new all-time high. So what happened today with NVIDIA? It went down 0.80%, and it closed the trading session at $426.53. Again, guys, and as I just said in the case of Apple, if NVIDIA happens to burst above 134, it is going to be in no man's land. We don't have any previous technical reference over here, so how high can NVIDIA go if it takes out 434? I don't know. 435, 440, that's anyone's guess. That's not a trade that I am willing to participate. In my case, a retracement down to a former resistance at around 406 would be, I mean, I could be thinking about grabbing, maybe not calls because the implied volatility is very high. Not that high as of now. It's been higher before, but you guys know that NVIDIA's calls aren't cheap. So in my case, the only trade to the upside that I would be willing to take over here would be a retracement down to 409. This would be $407, which is a previous resistance back from early June. This is also a previous resistance back from late May that happens to coincide with the 5-day moving average. There's nothing wrong with this chart. This is a major uptrend. NVIDIA is trading above an upward sloping 100-day moving average, upward sloping 200-day moving average. We can argue, as I just said in the case of the SPY, and in the case of Carnival Cruise, that NVIDIA is trading above. It is trading 58% above its 100-day moving average. It is extended, guys, but you guys know the drill. NVIDIA has been extended since 3 months ago, and it just keeps going higher and higher and higher and higher because we have a brutal hype and FOMO because NVIDIA is going to lead the brand new world that is going to be based exclusively on artificial intelligence. So we have a very good momentum over here. I wouldn't try to shot it over here. For me to take a shot once again at shorting NVIDIA, because I already lost money shorting it, I would have to see an important support being broken down to the downside. Let's say maybe 374. If this support happens to be broken to the downside on good volume and momentum, when I mean momentum, I mean that if NVIDIA breaks this support to the downside with the NASDAQ 100 and the QQQ falling off a cliff, then that might be an option in order to grab some puts over here, but the momentum is very positive. NVIDIA is under the total control of buyers. So not chasing it here, but maybe a pullback down to $408, $407 might make me think about buying the dip. Let me see if we happen to see some sort of change on the market structure of NVIDIA, buyers and sellers, demand and supply. And take a look, guys. This is encouraging for the bears. Kind of. We have a fall in demand and we have a supply that is rising and above average. So we can say that sellers are starting to step in and that we are seeing a bit of profit taking over here. So maybe lower prices are coming for NVIDIA. So I would keep an eye on 408-ish, give or take. I missed the beginning of the live. Did you talk about Tesla? No, I didn't. I can go over Tesla, not a problem. Absolutely. Yeah, sure. Okay, let's go over Tesla. Once it for all. TSLA. There you go. So what is going on over here, guys? We have a big level at 255. Tesla went down today 0.35%, and it closed the trading session at $255.90. Guys, we have a very specific situation here when it comes to the options market. So what is going on over here? Since the call options of Tesla pay close attention to what I am about to tell you guys. Since the call options of Tesla are extremely expensive, most of the call options buying that is taking place as of now is about way out of the money options. So most of the options, or most of the call options, I should say, that are being purchased as of now of Tesla are, like 280 calls, 285 calls, 290 calls. So keep in mind that Tesla has gone up since mid-April. Now, let's say that Tesla has gone up since late May and till this date, 43%. So Tesla made this huge push to the upside, basically based on call options buying. That implies that the market makers are already saturated of Tesla shares. So what does that imply from a mechanical standpoint? That we have a very big gap over here when it comes to the market makers. What am I talking about, guys? That we don't have a lot of call options purchased with strike prices between 260 and 280. We have a gap. You see what I'm saying? We have some sort of void over here of around 20 bucks. So since most of the calls that are being purchased are way out of the money and above 280 when it comes to their strike prices, the market the market makers aren't being forced as of now to keep buying Tesla shares. Are you guys getting what I'm saying? So for Tesla, in order to be able to take out the most recent high at around 266, 265, is this situation, or the fact that the bulls of Tesla can burst above 265, this is going to be extremely, but extremely difficult. We need to see call options buying in the money and at the money increasing significantly. So the market makers are going to be forced to buy more Tesla shares in order to cover the naked calls that they are selling. Let's say that tomorrow we have a bunch of market participants purchasing Tesla shares, or Tesla calls rather, with strike prices of 265, 260, 270. What is going to happen with the market makers? The market makers are going to see that they don't have enough shares in order to cover those new calls that are being purchased with lower strike prices. Let's say that tomorrow we have a bunch of calls purchased at 255, 260, not that out of the money. So that could force some sort of gamma squeeze to keep going, because if, as I just said, we have more buying of calls with strikes a bit out of the money, or at the money, or even better, in the money, that could force, as I just told you guys, the market makers to buy more shares of Tesla in order to prevent Tesla to go higher, let's say 265, 270, 275, and not having enough shares in order to cover the naked calls that they are selling. Because at the end of the day, guys, when you buy call options, someone is selling you guys those calls. In the 80% of the cases, when we buy a call, we have a market maker selling us that call. So if we have a bunch of people buying calls, a lot of people buying calls, what does happen from a mechanical standpoint? The market makers are forced to buy shares of that underlying stock in order to cover the naked calls that they are selling. So as of now, we have a very complicated situation on Tesla from a mechanical standpoint. We don't have a lot of call options from 265, 270 up to 280. So in my opinion, unless that situation happens, I would have to take a look at the call options that were purchased today. If that situation doesn't happen, Tesla is very unlikely to be able to burst above 265 bucks. Full disclosure, I am shorting Tesla over here. You guys know that I am a shareholder. I have a big, let's say a big position in Tesla of something like 280 shares. I already locked in some profit last week and I ended up making 19,000 bucks. So I already have like 200 shares of TSLQ. You guys know that's an inverse ETF that does the opposite relative to whatever Tesla does. I am planning on buying more shares near 265 bucks. So from a technical standpoint, the bulls have made a lot of progress over here. Tesla is in an uptrend, despite the fact that we still have over here a downward sloping 200-day moving average, which is not very positive from a technical standpoint. But we have a ascending 100-day moving average. Ascending, we can also see over here an upward sloping 5-day moving average. So there's nothing wrong with the chart. Tesla is trying to definitely reverse the downtrend that we have been seeing for a few months, but we need more call options buying above 260, 255 for Tesla to be able to keep going higher. Let me zoom in here. So 255 is a very important spot. Tesla closed right at 255. It could bounce from 255 up to $265. And in the case of 255 bucks, guys, this is a very important spot. Take a look at this. This is a 3-year chart. So 255 bucks happens to be a previous resistance back from June of last year. And this is also a previous resistance back from April of 2021. Very big level in the case of Tesla. So I wouldn't rule out, guys, a trade to the upside with the bulls consolidating above 255, closing candles above 255 bucks. This could let him gather momentum in order to fill this gap once again up to 265. But again, bursting above 265 bucks is going to be a very tough one for the bulls of Tesla. If they lose 255 bucks as support, watch out for another potential area of interest, support-wise, near 242 bucks. This is a previous support back from June 9th. And yeah, this is the situation on Tesla. Let me take a look at the market structure of Tesla. Do you have any questions, guys, about what I just explained to you when it comes to the mechanical reasons that I believe is going to prevent Tesla from bursting above 265 bucks? If you didn't understand what I say, which could be the case because I'm tired, let me know and I can explain that fact further for you. Market structure wise, we cannot say anything, guys. So we can confirm that buyers are in control, at least up to 265 bucks. So as you guys can see over here, the demand is rising. Remember, the demand is on top of this chart and the supply is on the bottom. So the demand is rising and the supply is actually falling a bit, starting to fall and below average. So this makes me believe that this gap up to 265 bucks could be filled once again. There you go. This was a very detailed analysis of Tesla, guys. Okay. CrowdStrike. And David LaSalle is asking. Absolutely. Let me take a look. CRWD. 5 p.m. already. Okay. So, yeah, nothing to complain over here. Crude uptrend above an upward sloping 100-day moving average, above a downward sloping 200-day moving average, which makes suspicious or kind of suspicious this uptrend that we are seeing over here. The bulls went up today 3.80% and they closed the trading session at $159.81. We have a clear resistance over here at around 162 bucks. The bulls already felt at this area back on May 31st. So this could be a breakout trade, guys. If the bulls can take out $162 on good volume, and if that were the case, we could be seeing a gap being filled up to $168, guys, which happens to be a former resistance back from October of last year. If we were able to take a breakout trade here, guys, with CrowdStrike bursting above 162 bucks, and if this gap up to 168 bucks happens to be filled, this would be a 4% profit trade. This is a very good technical chart. The bulls closed the trading session today above this 5-day moving average. The RSI is sitting at 69 points on the 4-hour chart. So there's pretty much nothing to complain about the technical chart of CrowdStrike other than the fact that the 200-day moving average is downward sloping. So we can say that sellers still have some sort of chance over here. Let me take a look at the supply and the demand of CrowdStrike, CRWD. CrowdStrike, there you go. Let me take a sip of 7-Up here. And let me see. So buyers and sellers. The demand is falling, pretty much collapsing. And the demand is also falling and below average. So this is not a good sign. This is not the best market structure for me to go long a stock. So since I just saw this supply and demand chart, I would wait for a process of consolidation above $162. And if that were the case, I could be grabbing calls or shares in order to see if this gap up to $168 could be potentially being filled. AI, Fishman says, and Coinbase. There you go. Let me take a look at good old C3 AI. It went on an absolute tear today, guys. Up 8.24%, and it closed the trading session at $46.37. And guys, I don't have that options alert over here. Yesterday or on Monday, someone, we don't know who that person was, invested $4.5 million. Get this, guys. $4.5 million in call options of AI that expire in August with a strike price of $70. Can you guys believe that? $70. Well, whatever. Is AI going to climb up to $70? Who knows? The stock is in some sort of a technical breakout. So we had a very clear previous resistance at $46.20. The bulls failed right at this area in late May. Today, they took $46.20-ish, and they started to close candles above that area. So this is a technical breakout. We also have an upward sloping 5-day moving average. We also have an upward sloping 100-day moving average, and the 200-day moving average seems to be starting to rise. Very, but very compelling technical chart. So let's say that the bulls can consolidate or hold as a new support what once acted as resistance. So this area at around $46. So how high can they go? Let me pull up here a 3-year chart and get this, guys. The next gap to the upside could be potentially taking C3AI up to $56. $56 is a previous resistance back from November of 2021. Wow, this is unbelievable, guys. We had 0 interest rates and the Fed printing $130 billion way back then. So maybe that could have somehow justified the valuation of AI way back then. That is no longer the case. That has nothing to do with the technical chart, obviously. And this is also a previous resistance back from August of 2021. So this is the next gap. And I'm thinking, guys, that AI has some sort of event tomorrow taking place. Let me see if I can pull up here the news. I think that they announced an event that is going to be taking place tomorrow. Let me see. C3AI to participate in Wedbush Securities AI event, AI Revolution, diving into the AI theme. So Wedbush, and these guys are a bunch of tech pumpers. I think that the event is taking place tomorrow. Don't quote me on that. Let me see if I can see the date of the event. Let me see. Okay. All the AI and enterprise application software company today announced that C3AI will be participating in Wedbush AI Revolution, diving into the theme virtual. This is going to be a virtual conference on June 16. How about that, huh? So get this, guys. Wedbush Securities, which is some sort of hedge fund that invests solely in technology. So they are carrying out this event the AI revolution, diving into the AI theme. So this event is going to be taking place tomorrow at 11 a.m. Eastern Standard Time. So watch out for this time, guys. 11 a.m. I guess that the CEO of C3AI is going to try to pump the stock, obviously. So the event starts at 11 a.m. and whenever the CEO speaks, then we might see some sort of pump for AI. There you go. Did you guys know this? Did you guys know this? Or are you finding it out because of me? If that is the case, you're welcome. Okay, so we could be having another AI pump tomorrow based on this event. And yeah, there's nothing to complain about this chart, guys. If you rather want to buy a pullback on AI, watch out for the 5-day moving average at around $41.55. So over here, we have the 5-day moving average, which happens to be ascending and rising, coinciding with a breakout candle to the upside. So this could be a potential spot from which the bulls could be bouncing back up in case of a retracement, $41.72 approximately. Let me take a look at the market structure of AI. What is going on over here, supply and demand-wise? Let me see. So take a look, guys. The supply is falling off a cliff below average, and the demand is flat. It is way above the supply, but it is neither going lower or higher, just flat and stable. Very good sign from a market structure standpoint. So the stock is in a technical breakout. Tomorrow we have an AI event. And obviously, guys, every single one of the technical analysis that I am doing during this live stream, they are subject to whatever happens tomorrow with the markets as a whole. I just told you. We are expecting some sort of pullback in the SPY and the QQQ. So if that is the case, then whatever the major indices do might be affecting the performance of the stocks that I just went over. So that is something that you obviously have to keep in mind. So $46.20. From here, C3I could be skyrocketing. Who knows? We'll see what happens tomorrow. Okay. Any other requests? Let me see. Tiana Phillips, CRM. There you go. Let me take a look at sales first. And we are, hold on, 42 minutes in, guys. So I am going to be wrapping it up at any moment because I'm very tired. So CRM went up today 1.20% and closed the trading session at $211.92. So this is an uptrend, upward sloping 100-day moving average, semi-ascending 200-day moving average, and the bulls of CRM are doing a very decent job, guys, holding $206 as support. This is a very important spot for CRM. This is a pivotal spot for CRM. $206 acted as support on June 14. It also acted as support on June 7th. Also acted as support on June 1st, and it also acted as support on May 24th. And this is also a previous resistance back from early May. Very, but very critical spot for the bulls of CRM at around $206. The bulls or CRM went up today 1.20% and it closed the trading session at $211.92. The bulls closed the trading session slightly above the 5-day moving average, which is a good sign, $211. Let me draw a line over here. Let me see. So, and take a look at how $211 happens to coincide with a previous resistance back from mid-May. So I have two potential trades over here, guys, that I can think of. A retracement, once again, down to $206 if the bulls happen to be able to hold this area as support from $206 up to $212, $211 approximately. This would be a 2.52% profit trade. Or if the bulls can consolidate slightly above this previous resistance at around $211 that happens to coincide with the 5-day moving average, we have another gap to the upside up to $219, which is a previous resistance in which the bulls failed on June 12th. From $212-ish up to $220, this would be a 3.7% profit trade. Nothing just needs that. So this is another stock that I am going to put down on my watch list. Let me take a look at the supply and the demand of sales first. Let's see what is the demand and the supply looking like. So the demand is stable and the supply seems to be rising a bit, but it is below average. So we can confirm from a market structure standpoint, so from a demand and supply standpoint, that the bulls are still in control despite the fact that CRM has pulled back a bit. And maybe this gap up to $220 could be being filled soon. Who knows? We'll see what happens over here. Okay, guys, we are already, as I just said, 45 minutes in. Thank you very much for dropping by. I'm a bit tired, as I just told you. Tomorrow is going to be a crazy day. Remember, we have quadruple witching, which is a day in which weird stuff happens. That's a day in which usually volatility picks up a lot. We're going to have $3.5 trillion worth of options expiring. That is no joke. So we might see a higher volume than usual. And be careful. And remember, we also have a long weekend. And yeah, usually, for the most part, let's say that 60% of the time, whenever we have a Friday, that comes before a long weekend, the markets go high or go higher. So could that be the case tomorrow? We don't know, because the close that we saw today was very solid from a technical standpoint. But yes, both the SPY and the QQQ need to take a rest. And if that is the case tomorrow, maybe this rule, this 60% rule of the markets going higher before a long weekend might not be the case tomorrow. We will see what happens. I will be with you in Discord calling balls and strikes. Okay, guys. Thank you very much. Enjoy the rest of your day. And I will get together with you once again in Discord, okay? Thanks. Take care. Bye. Enjoy the rest of your day. Bye.